Hi, welcome to another episode of the High Performer Building Pulse. This week we're catching up with Peter Thompson to have a little snapshot on what's going on in the real estate market. It's been a while, so it'll be good to get some feedback. I think there's been somewhat of a turnaround since we did that. But this is just another opportunity for us to serve the wider industry, give a little bit of information, but also in our pursuit of innovation, both in products and systems, and more holistically, what are we doing? Where is the innovation coming from? And part of that comes from knowing the market, knowing the data, where are we going? And that's really beneficial to us as a wider industry. So, that's why we put these things on. We're wanting to expand this. So, keep your eyes peeled. You might have seen last month, we also dropped the episode with Cameron Baggery as a podcast, and I believe we're going to be pulling a blog together out of it as well. So all those formats are there. Next year, we're wanting to put a lot more energy into this space because we think it's really beneficial, and we're getting a lot of great feedback from those of you that are listening. So thanks again, and let's go ahead and bring Peter in. Cheers. Well, mate, it's been a long time and I haven't recapped, but I can't quite remember what we actually covered last time. But I suspect there's quite a different story of what's going on out there now, and the general sense and the mood from your agents in terms of where things are sitting now versus 6 months ago. Give us a bit of a snap.
Yeah, I think if we look 6 months ago, obviously it was a very tough market. Listings were hard, and Reserve Bank weren't moving, interest rates weren't moving. But I think since we've settled down, we've seen the Reserve Bank do two big cuts recently, and I am expecting another 0.25 before Christmas. They've indicated that there's a possibility, or we've heard that.
Yeah.
And I think the fact that the inflation rate's now down into that, 1 to 3%, where they want to be, if we can hold it around that, it's going to still take some time for people to get out of trouble. And, there's still a lot of people hurting out there. And, once the interest rates start moving and banks start reducing the interest rates, it's still going to be 6 to 12 months before everyone's sort of through that time period where the fixed terms, etc., will start coming off.
Yeah.
So it's certainly we're seeing more listings coming on. Sales have certainly increased. Options are back selling under the hammer. But it is still tough out there, and some vendors are still thinking, oh well, we're through the hard part, now I can get a good price for my property. And the overpriced properties are just going to sit there as they're already doing. So it's people have to be realistic. It's going to be like this now for the next maybe 6-12 months.
Give me a sense of what happens on the ground in terms of feedback from everybody your agents are working with. Each time there's a shift in the central bank reserve rate and the interest rates start to come down, what do they see? What do they hear? What are people telling them?
You get a quick rush, but then it slows down. Everyone thinks it's a great thing that's happening, and it's got to be good eventually. But as I say, it only affects those that can actually reduce the interest rates at the current time. So if you've got fixed terms, you're still holding on to that rate until such time as it can move. So there's plenty of people talking about putting houses on after Christmas. We're saying bring it on before Christmas. There's still good opportunity because there's some very good buyers out there at the moment. And it's interesting just seeing the first home buyers that are out there getting the opportunity. But people are just still a bit cautious of when to put it on the market.
So give me a little bit of your view from let's say the next 12 months. So where we are just pre-Christmas 24 through to pre-Christmas 25. What do
Yep.
you think it's going to look like in terms of a shape?
Gonna give me the golden bull.
Have
Um,
a punt.
hey, real estate is cyclical. And we will see our traditional November summer uplift, and we're seeing that starting at the moment. Will fall away over Christmas when a lot of people go away on holidays.
Mhm.
It will pick up again end of January, right through to end of, say, maybe April, and then we get into the winter months, which traditionally just slow down. So that's just seasonal up and downs.
Yeah.
As far as the market's going, I think we're still in for a reasonably hard time between now and, say, the next 6 to 12 months.
Yeah.
And that's just because of people, you know, they may get interest rate relief, but they've still got a lot of debt to pay off. I think the COVID spend in 2021 is now starting to really affect a lot of people.
Mm.
And once we're through that period, I think we're in for some, good, reasonable times.
Yeah.
Prices, I don't think we're going to see a lot of movement either way. There has been some that have come back a little bit around the country, including Auckland.
Mm.
But if you actually take it over a 12-month period, and that's what I try to do, is take it over a 12-month period, it's very similar to what we were this time last year. So not much movement in price, but sale numbers have increased, and that's good, especially from our perspective.
Yeah. Yeah. So a lot of it must come from the fear of a contracting market easing off
Yep.
to stimulate that activity. But you're right. The reality is, we might have inflation under control-ish now, but it's not negative inflation. Stuff's not about to get cheaper, and we're still actually adjusting to the price of, the increased prices.
Yeah.
And it'll take a while, not only I think for interest rates to come down, but for incomes to start to catch up. And we're still getting job losses coming through the system, and it's going to take a while for that bit to turn around. And you
Yeah.
need all of those things humming for the property market to be buoyed up. Is that right?
Yeah. So we're going to be in a normal real estate market, not high market, but not low market. We'll just be in a normal one, and that's people got a price right to sell. And all people have to remember, if they're buying and selling in the same market, there is no good time or bad time to sell, because you're either going to make it or lose it both ways in the swing between the two purchases.
My piece, when I look at it, it seems like we'll look to move in the next, I don't know, 6-12 months if I can pull it off. But I feel like in the current market, I could upgrade for 200 grand and get what I might have had to pay 500 grand for
Yep.
more when things were hot.
Yep.
The difference you might get, say, between, say, like a 1.8 and a $2 million property at the moment.
Is
12
better
months
than
ago, that was 2 and 2.5.
Yep. Correct.
Like it got stretched out.
Yep. That would be a fair comment.
Yeah, so in some ways, it's a great time to move if you can pull it off. Of course, that's the hard bit, because then you get to ride up on a high value property, right?
What we are seeing is the real high market, sort of over 5 million, has actually been very active. But a lot of those people aren't affected by the interest rates or cash flow, but they've got the money already organised. But that has been very very busy for us in the past few months. It's and similarly, sort of under sort of 800.
I was going to say what's happening at the bottom.
Yeah, that again, that's very good movement, both first home buyers, but also the odd investor coming back into the
I was
market.
going to say, are we starting to see investors coming back yet?
Very slowly, not rushing in, but we're starting to see a couple of developers buy some land to subdivide. Obviously the government's trying to encourage building again, so and new legislation coming out there. So, people are starting to look. They may not necessarily be buying yet, but they're certainly out keeping an eye on what's happening in the market.
Mm. I mean, one of the biggest handbrakes to it all is still cost of construction.
Yep.
And you really look at, it is fascinating that we compare ourselves to Australia being so much cheaper. And it's just hard to see, because if you look at some of the big pieces, you go, well, the labor and the unionized workforce is arguably more expensive than what we have here and less productive. So materials, everything points to materials, but if you look at the proportion of expense that we spend on materials to, the rest of the whole build process, it's not that big. So you kind of go, it can't all be coming from there. And that doesn't leave a lot. That leaves consultancies, engineers, and consenting and all of that. And I think that's a big piece that, we've got to get streamlined. We've got to get the consenting process down. We've got to get some standardization so we don't have to spend as much on all the consultants and things.
I've been talking about consenting for about the last 2 or 3 years, and it's incredible. One of our people at work here is just doing renovations to a place at Waiheke. Most probably around about $1 million worth of renovations, but 120,000 already in consent fees.
It's mad.
It's ludicrous. For
which
what?
then winds back to, we've got to get the civil bit right, because that's essentially what the councils are trying to recover. And they're really trying to recover decades of underinvestment in civils and trying to catch up,
So I think with government intervention, that will start to come in. I think that is one area that they're certainly looking at.
Yeah, I'm really interested to see the piece around kind of uniformity across all the councils, because Auckland, I'm sorry, but they're just one of the most difficult councils to work with. Things that you can do everywhere else in the country, all of a sudden is interpreted differently in Auckland. It drives the market batty.
Having built a place down in the Thames Coromandel area, I would say the Waikato Thames would be the worst, but
yeah, that's the
I
thing.
think everyone would have their own stories, but I agree with you. There needs to be some form of, similar rules and costs throughout,
and process. Why, when you build over there, do you need all these extra documents and proof, and down here you don't? It's just does my head in.
And this 20 days, and then I know one thing's wrong with your application, so you got to wait for another 20 days.
But it's not even the time. The time's definitely slowing down, and it's adding an interest cost. But as you say, like your friend building in Waiheke, they're not complaining about how long it's taking. I'm sure they like to go faster. Well, but the big one is that dollar figures, because that's all pushing through to values and everything else. And the other thing is, when those things start going up, then you've got all of a sudden, proportionately, the other 800,000 doesn't feel as bad. Whereas if it was coming down, hang on, all of a sudden everything starts feeling expensive. You have kind of that proportionality that starts to justify higher prices in other areas. But anyway. And
what was interesting, I read from our global economist today, her latest update, and she's saying that China is really still very slow, and prices and property over there are still falling, and she thinks it could even be another 3 years before they really turn the corner over there. Now
Wow.
that's a bit of a worry for us because a lot of the money comes out from over that way to buy property over here.
Yeah. Well, then though,
Um,
wouldn't you argue that we're a more attractive investment option than local at that point?
well, for local, we are more investors, but if they don't have they got the money, and that's the problem. We need
Mm.
to have some of these foreign investors, and I think that's what Winston's finally waking up to is, there's good opportunity to come in, not from property, but just from the foreign people wanting to bring their businesses here.
I think that's the thing. It's the investment in productive assets. It's not the narrative has to change of these people are coming to buy houses and push the prices up from that to, well, no, we want to inject some cash into this whole productive side of the
Yeah.
economy.
And I think that's where they just need to change this legislation that, people who want to buy from overseas can buy, but they have to live here
Yeah.
and have their 60 or 70% of their time, working in New Zealand. And
Mm.
I think most of them want that now.
Yeah. Yeah, so I was going to ask about foreign buyers. The other thing I was going to ask you about was the rental side of things and where is that sitting?
Yeah, it's interesting. There was just an article on the Herald, not Herald, the breakfast show, either this morning or yesterday, and rentals throughout the country have gone down a little bit, except for places like Northland where they've gone up. Auckland's most probably still status quo, but signs that they may come back a little bit, which is what the government was hoping for with all their changes.
Right.
Um, but there's still a lack of supply. The supply is the big issue in property management.
What do you see when we look at the stuff Shane Briley and some of the others are doing in terms of that build to rent market, but also targeting really, really affordable housing and affordable rents, where they're setting rents in their buildings below market rent rates?
Yeah, I'm not sure how they're going to make the money.
Well, I mean, they're looking at their investment, their total overarching investment.
Yeah,
They're not looking at short term.
no,
And they're saying this is a fair figure for us to get, even though we could get more with the market rates. This is fine, and this is where we're capping it.
yeah, it's it's a hard one because some of those developments are becoming, um, areas of concern for living situations. Um, you downgrade the new apartment block to have a mixture of tenants that can't afford to buy, and then you have some where you've got buyers that have bought. The value of the properties are going backwards rather than forward,
Mm-hmm.
mainly because sadly tenants don't treat properties the same way as what homeowners do. So you've got a mixture of good properties and some that get damaged pretty quickly. Um,
Yeah, I suppose there's an argument there for them to say, well, that's what they're trying to do. They're trying to affect affordability.
yeah,
Um,
well, you won't get too many developers that will want to do that over time.
yeah, yeah,
And who are the developers? That generally they'll be the mum and dad pars that want to invest in something and thinking they're going to get a capital gain. Well, if your capital gain goes backwards, that's no one's interest at the moment.
yeah, yeah, yeah. But on the flip side of that, um,
It does get extra people into housing
it
and
gets people into housing and this kind of this piece where we've got as a country so much of our money tied up into property, relying on capital gains. It's kind of, you know,
you look at that, but at least it's more a secure investment. You look at some of the people that are putting money in shares and everything at the moment. That market's so up and down too.
yeah,
I won't say I've had much invested, but what I have, has gone down pretty quickly over a period of time. So,
Yeah.
it's you got to be prepared to lose money in that market, and hopefully you make it as well.
Yeah. Yeah. And those fundamentals haven't changed. And so, is there anything else that's going on that you think is worth mentioning that's kind of having an effect on the real estate and or the international space? Well, yeah, international area.
No, the international, as I see in China, is probably the concern.
Yeah.
The States prices are still going up, but they're hoping that over the next 6 months, interest rates will start to turn. Once the election's out of the way, people will know who's running it. And I think that's just had a slow impact on the market over there.
Yeah.
Australia, I spent last week over in Brisbane, and it's interesting about food commodities and prices there. That's just as expensive over there as it is. Petrol was almost, we're paying dollar for dollar.
Mm.
And I thought, they're saying that Brisbane generally is the cheaper of the four major cities.
Wow.
Certainly didn't seem that way with every time we went into the supermarket or, cost of living out of the restaurants.
Yeah.
So, hey, New Zealand's still a good place to be.
So that's it for another Building Pulse. Look, love to catch up with anyone that's out there looking at doing some stuff in the industry. If you've got a development or thinking about doing a development, in some ways we become quasi consultants that we don't get paid, but we get a lot of information around what's going on, where the innovations are coming from, and how people are doing things better in lots of different ways. And that can be really beneficial just to come and see both the product range we've got here and some of the ideas that we've been exposed to that we can share with you. So, yeah, come on in, look us up on the website. You should be able to book a showroom tour or just reach out one way or another. We'd love to hear from you. Thanks again. Bye.